Hi, this is Lex, and welcome to the Fintech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, everybody, and welcome to today's conversation. I'm really excited to have with us Tom Pageler, who's the CEO of Prime Trust. We're going to learn about what a fintech API platform looks like, as well as a whole bunch about the crypto ecosystem, about security, fraud, trust, what all these things mean. So I'm really excited to learn more today. Tom, welcome to the podcast.
Thanks for having me, Lex. Really excited to be here.
You've got a really interesting background from starting your career in the U.S. Secret Service and then going into fraud control at Visa. I want to ask you what pulled you in that direction? Like, how did you get compelled into service? What was interesting to you about that area?
So I come from a family of law enforcement, both my father and grandfather, and I actually was heading towards media arts. I grew up in LA and I thought I wanted to do media arts. Was studying media arts and found it not too exciting. So I decided to switch my majors back over to business and public administration and focus on pursuing law enforcement. Specifically, I knew some Secret Service agents, and it was just kind of an interesting career that you get to do protection and investigation. So I think that drew me in. Did an internship with them and just absolutely loved it and was like, this is what I want to do. So that's kind of how I got into the Secret Service.
I know I can't really ask what any of the things are, but what kinds of investigations, like what were the things that were compelling to you? Like, what did you like about the process of working on cases, and maybe like what kind of skills did you pick up?
Well, I think a lot of people don't know this, but the last thing Abraham Lincoln signed on his way to Fort Theater was the creation of the U.S. Secret Service. And it was originally created to stop counterfeiting in the South during the Civil War. It's just ironic that they started doing protection after McKinley was shot. So the original mission was to really protect the currency of the U.S. And I think that fundamentally is a pretty awesome mission. Because when you think about it, the currency is the most important thing. It drives everything. So any investigation around currency is pretty exciting to me. And that's really what drew me in. And obviously protection is pretty awesome because you get to travel the world and basically see history in the making.
That's quite the history, because often the federal government uses things like the currency or interstate commerce to motivate a lot of federal activity. Does that have a similar history? Like, what does it mean to protect the currency?
Started the Secret Service. I was actually part of the Department of Treasury. And then obviously September 11th happened when I was there, and we became part of the Department of Homeland Security. Being under Treasury really made sense. I mean, obviously Homeland Security does as well. But when you think about, Treasury and where it kind of started, it was to protect the Treasury. And as you said, Treasury is what is used by the U.S. government to really control a lot, right? Obviously, we see with inflation, we see the Fed, moving the interest rates. We see, how much currency is in circulation and not in circulation. And, obviously, as we talk, you'll see how it kind of comes into fruition, even with the CBDC programs that are going on. Obviously, the Secret Service will have a big part of that input to make sure it's secure and safe.
What pulled you from that role into the private sector? What were the things that maybe you brought to the private sector? What kinds of issues were you focused on?
I think what's interesting was when I was in the Secret Service, I actually hired in Chicago. I'd done an internship there, and my wife had gotten into med school in Chicago and then in the Bay Area. And it was one of those cold days where the snow was blowing up from the lake. And she said, I don't care where you're going. I'm going to the sunny Northern California, going to Stanford. So I called the Secret Service and said, hey, is there any way I could start in the Bay Area instead, San Francisco? And they said, you want to go on a government salary to one of the most expensive places in the world to live? Absolutely. So my undergrad was in business and MIS, and I have a pretty strong technical background. So we had started an electronic crimes task force. This was kind of as the internet was starting to boom. I helped found and was a key player in the electronic crimes task force in the Bay Area. Obviously, this is back when Google was just forming.
What are electronic crimes? I assume it's not like very bad techno. It's something more severe.
Yeah, it's more of anything that was happening over electronic. So at the time, the internet was just kind of booming. You started to see payments, taking online payments taking place, like PayPal was really starting up, some of the newer things that we take for granted today. And the idea was how do we investigate that? And then obviously I did go through the computer forensics training. So I was doing computer forensics training. And I actually identified 2 fraudsters, one Russian, one Ukrainian, and chased them all over the world, arrested and apprehended one in Cyprus, one in Thailand, and extradited them back to the US. And I think at that time, I really got to see the underground and just kind of how things were happening. And, obviously that opened up a lot of private opportunities. So I had quite a few private companies I'd worked with that were pursuing me, and Visa was really appealing. It's, an interesting company that started in the Bay Area. It was originally Bank Americard. Late 60s, early 70s was the first idea of credit. And it's just interesting because they really disrupted and changed the world. At the time I joined, it was the largest payment system in the world. It was just a very exciting step into private industry.
What kind of things did you work on there? What were the early, tooling, or what were the early approaches that a payment network had to figuring out e-commerce and, create safety? Maybe another way to put it would be like, what were the goals of a payment network relative to the e-commerce in which it participated?
I think it was a pivotal time for Visa. So it was a time when the internet was starting to boom. So online payments were starting to become more significant. Before that, it was more mail order, telephone order, which was, you order through a catalog. And they were seeing a switch from, card present, handing a card over, to card not present. With that came a lot of risk. So it was really exciting. I obviously joined on the fraud control side. While there, we created the Payment Card Industry Data Security Standards, PCI DSS. We actually went from a private company to a public company, if you remember that. It was actually with Visa USA, and then all the other regions came together and we went public. And it was just very different. You had to go from traditional card present fraud and tracking people to international attacks, trying to figure out how to allow online payments to happen in a secure fashion. And the 3-digit number on the back of the card, all those things. And we had to get more advanced. We had to really start looking at, where breaches were happening. There were a lot happening. We had processors, that were getting breached. We had stores that were getting breached. As people went online, it was just very difficult to figure out what their weaknesses were. And so we did a lot of analytics. We would look and say, okay, where's an area that cards had legitimate use and then subsequent fraud that was out of whack? Then you start to, narrow down saying, okay, it's likely a processor or it was a store or something. So just really interesting time to use big data to really find the trends and what was happening, and then try to put in different steps and mitigation steps for the whole industry, mitigate it, through the PCI Council or just Visa in general.
I still viscerally remember in the earlier e-commerce and internet days where people would use putting your credit card online as this example of wildly foolish behavior. Like you'd never shop online because how could you share your bank information to this? It's just like posting your passport number for everyone to steal, this sort of like fear. And of course, today it's nothing could feel safer than, some checkout cart that integrates with, Google Pay or Apple Pay or whatever it is. I want to ask you a question just as a reflection around this, with you having worked kind of in the midst of that perception of how dangerous it was to use credit cards for shopping. And today you look at crypto and there's a similar narrative about you're going to use bridges, it's going to get hacked. You're going to use a DeFi protocol, you're going to lose it to a hack. You're going to trying to use some exchange. Okay, that exchange is going to blow up and it's going to get, hacked. And everything is just Kim Kardashian selling Ponzi schemes, which is, maybe true as it relates to Kim Kardashian. I don't know.
I won't argue with that.
I don't know. But I don't know. Anyway, so the point is, I think there's a sharpness that's very similar to that moment, 15 years ago. Can you talk about that? And if you have any reflections on both what it felt like as it related to e-commerce and whether it's similar to how it feels in crypto today, and then maybe, any projections forward of your experience?
Yeah, absolutely. I think my entire career has been focused on going into risky areas and bringing controls in place. And so obviously my time at Visa, we saw that right when I got there. Like I said, online payments were new. People were afraid of it. It was hard to get people in there. The fraud was going to be out of whack, all these, alarmist comments. And then I was at JP Morgan Chase during the 2008 housing crisis. And you had a lot of, issues there with, failed banks and things happening and no one trusting just the global economic system. Then joining DocuSign, which everybody was like, you're never going to sign these, documents, and it's going to be complete, fraud, and you're going to get into contracts you never agreed to, never signed. putting controls in place and making sure that, look, honestly, today, if you don't get to DocuSign something, you complain, right? It's more secure. It's more likely to identify the person on the other end. But it was an uphill battle at that time. And then, coming into BitGo and coming into Prime Trust, same thing. Like you said, crypto is all a Ponzi scheme. It's, issues, and it's, they're out to defraud you. But if you look at Chain Analysis put out a report in 2021 that only basically 15 basis points of activity on the blockchain was related to criminal activity. And that's a drop from 2020, which was 62 basis points. So honestly, in with the large volumes and everything you're seeing in blockchain and crypto, most of it is not fraudulent. And I'll even specifically say, back when I was in the Secret Service and I was trying to track fraudsters who had defrauded the traditional banks, the TradFis, it was really difficult to track because I'd have to go and do requests all over the world to get the banking records. And it would either be through a mutual legal assistance treaty or a letter of rogatory. And I had to wait months to get it back. And by the time I actually found the money, saw where it was long gone. Whereas with a public blockchain, I can see it right now and track it everywhere. So it's instant and it's available. So I actually agree with you. I think it's, just trying to get the current individuals in the space to understand that there is security around this, that it's not as dangerous as people think, that it actually makes banking much quicker, faster, more publicly available, and cheaper. And I do think the next generation sees it and they're just naturally going to adopt it. And that kind of happens, obviously with credit cards, with online payments, with online contracts, all that. It's kind of the next generation adopts it easier.
I find a bit of a difficulty in talking about this topic because on the one hand, people are experiencing often real and severe financial loss through their, financial journey in the space. And that is damaging. It has to be respected. It's bad for everybody. And there's a collective burden as a result of it. On the other hand, if you look at it from a macro perspective on a long enough timeline, this is just risk capital that is being used to polish away the things that are broken or that are weak. And the challenges that people have in this particular moment, again, with the rug pulls and the frauds and the scams, there's not a lot of meaningful substance in those objections as to the way the industry is developing. Yes, it's happening. And yes, it needs to be overcome. It has been in other examples like the ones that you gave, and it will be, in the future here as well. It's a very difficult thing to kind of resolve. How do you square these two things? On the one hand, to be very cognizant of the damage that is being done, but then on the other hand, to really see that it's not a real objection, or it shouldn't be treated as a but-for objection to the way the ecosystem's growing.
I think you need to look at who you're working with. As we said, when the payment space evolved, when online contracts were changing, like DocuSign invested heavily in security. Obviously, I was the CISO then, became the chief risk officer, so I understand how much we put into compliance and risk and fraud control. Same with Visa. Even the banks like JP Morgan, they've always had a very strong compliance, risk, anti-fraud group. And I think those who cut corners and you can be innovative, you got to watch for, because they're going to offer high returns. They're going to have very exciting stuff, but look what's underneath. Is there, a good fraud team? Is there a compliance team? Are there, complaints online? Do they actually respond to it? And I think it's very important to look for those who are probably building a little slower, but building with brick. And, an example here at Prime Trust, every time we hire an engineer or anything, we make sure that there's either they're a security engineer by training, or we hire a security or compliance leader to be in there with them, because we want to make sure that everything grows that right way. And we've seen that with lots of the larger exchanges and some of the larger players in the space. So I think it's just, really looking at it and saying, hey, if something's offering me 20% return or something like that on an item, and nothing else is even close to that, it's okay to take a little bit of risk, but don't risk everything on it. Just kind of evaluate it, look at it, and understand that, hey, this could be too good to be true. It probably is.
What is a security engineer?
So an engineer who has some kind of security training, so they're going to look at different things as they code and make sure that they're, not just putting in vulnerabilities. They'll know how the scanners work. They're going to understand, basic security 101. They probably have participated in a purple team or maybe a red team where they're just kind of doing some exercises against each other, trying, understand that how a hacker thinks and making sure that when they code and build, that they're looking at different fundamental flaws that they could accidentally put in place had they not had any security training.
What are these team exercises that you describe? And how does a hacker think?
So like when you think of a red purple team, so a red team is actually like going out and trying to do attacks on each other. Purple team's more, hey, let's go try to find some vulnerabilities, see what's going on. We do conduct hackathons. I've done that throughout my career at every company I'm at. What you do is you just try to get some teams together, and usually traditional engineers, and then those who are more built on the security space, implementing security solutions, and you team them up, and they just kind of go and they spend like a Friday looking for some kind of vulnerability or something, and then find a way to enhance it. And you have a hackathon to do that. A great example, we had that at DocuSign, and a group thought, hey, instead of allowing documents to be uploaded directly, let's sandbox it. Then this is before like Kubernetes and everything like that, but let's sandbox it, clean it up, strip it, and basically bring it in as a PDF. And that was awesome, right? So it's like, okay, that just protected from any vulnerabilities being uploaded and some malicious code and anything that was uploaded. Then they started to say, hey, let's analyze what was coming in and see if any of them were attempted attacks, so we can start to identify those who could be potentially fraudulent or have been hacked themselves. So, maybe they're a fraudster trying to upload something, or it's a customer who just has some kind of virus or something on their system, realize they're uploading it. So those are the kind of things that really, I think, move the needle, because it's just making them think outside the box and really trying to say, hey, how do I secure this going forward? And I think it really appeals to engineers, because it's like, oh, I found a problem. Now let's solve it. And then they iterate on it each hackathon.
I get to ask you questions that I don't get to ask anyone else, which is why some of them are a little bit weird. But I want to make a comparison between DocuSign and blockchains. And at some abstract level, people need to make agreements, right? People do make agreements. They make contracts. They come to a meeting of the minds. And then once they are aligned on some particular outcome, then that leads to an action or a legal agreement and a contract that's legally enforceable. And so we have the substrate of the law to kind of structure what is sufficient for an agreement between people. As we know, people are corporations too, or corporations are people too. So all sorts of stuff. Okay. So there's that substrate, and there are transactions that align to contracts. And it's very expensive to have lots of lawyers for all of your transactions, and to do that either on paper or to do that through even email and fax and so on. And so DocuSign has this fantastic innovation of digital signature on paper contracts. And so it's an example to me of digitizing a paper process, or like a workflow, a traditional workflow. And then on the other side, you've got distributed ledgers, blockchains, and they are transaction machines as well. They just don't invoke the law in their settling of transactions. They invoke a lot more math and a lot less law. And so in a sense, there's this interesting symmetry in your background between DocuSign and then going closer to the blockchain world. First off, does that ring true? Does that make sense? And then I guess, how do you think about transactions maybe more generally?
So I'm no longer at DocuSign, but I'll answer on what I think is going on there. So DocuSign has kind of like an original ledger that was in their system, and it's private. So when I was there, obviously what happens with DocuSign is, let's say you and I, Lex, agree to a contract. So we both go in, it records our IP addresses, email, different information on us. So I can tell that you are Lex and I am Tom. We agree on something like maybe a contract that I will, I don't know, sell you my car for so much money, whatever. And then what happens is they take, and that's stored within the DocuSign system. DocuSign cannot go and look at the contract itself. What they can do is they can see a hash value of that contract. So basically you and I could go to court, and you could say, no, Tom agreed to sell it to me for $50. And I say, no, $100. And you could produce a contract, but DocuSign will just say that's not the correct contract because it doesn't hash out to what we have on record. And when I produce something that does have a hash value that matches, they'll say, okay, that's the system of record because that's there. So it's kind of a mathematical computation, right? You can't adjust it. You can't change it. So if I'm DocuSign, and again, I'm not there anymore, I would start looking at public blockchains and the technology there, because basically, at some point, do you want it on your internal ledger, or do you want it to just be an external ledger? And to your point, if everything could happen, and we trust DocuSign, it's been around a long time, they have fraud teams, everything like that, wouldn't it be great to be able to do all that in DocuSign and then just have it on a public ledger that basically shows that there is a block that says we do have a contract between us and it's got to match that way. And then basically, instead of it having an internal, it could go external. So I think that the next iteration is just companies like DocuSign and maybe payment companies just moving into a public distributed ledger, because it would just be much easier. And why would you have to store that yourself?
Yeah, I guess the digitization doesn't stop until we're all fully uploaded into the Twitterverse. There's no end to how far it can go. Thereafter, you moved closer and closer to the crypto world with BitGo. I'd love to hear kind of what was the magnet that kind of got you into it and what your experience was in the earlier days.
Yeah, so I have a small venture capital group, and we'd invested in a crypto company that had like an ICO back when people still did ICOs. And we were like, wow, we made more on the ICO than we planned on the whole investment, and we still own part of the company. So we're like, this crypto is pretty interesting, right? It's just a very interesting concept. And I kind of led the analysis onto whether or not to invest in them, because at the time we just perceived crypto as kind of a security related area. And obviously that's my expertise. The individuals there knew Mike Belshie, the founder and CEO of BitGo, and they said he was looking for someone to run operations and security and would I be interested. And I talked to my partners, and they're like, yes, please go learn crypto. It seems to be taking off. So, great meeting with Mike Belshie, and obviously BitGo is very well known, and I love the wallet technology and understanding. It was great to be there and just see just interesting things like, the way we could move large amounts of funds for very minimal costs across the world in a secure fashion and know it's there. Just really opened my eyes to the possibilities here. However, BitGo is mostly focused on wallet, especially back then, and I've definitely got more of a payments background. And so Prime Trust was recruiting someone to come in and take it to the next level. And, I ended up joining Prime Trust because of the way that we have more of a payment, B2B to C model, which was much more appealing to me because I feel it's much more of a disruptor. And it's going to actually, get I feel it's going to be a bridge that gets TradFi into crypto much faster.
Could you describe the growth that Prime Trust has seen? What is its core product? And then how has that expanded over time?
Yeah. So what Prime Trust really is, it's an API stack that offers anyone who wants to innovate in crypto the ability to quickly and seamlessly bridge between TradFi and crypto. What I mean by that is we're a fully licensed custodian, a trust out of Nevada called the FID, the Financial Institution Division of Nevada, who governs us. And that allows us to custody both traditional fiat like dollars, euros, yen, whatever, and digital assets. We also offer compliance. So as you sign up with us, you go through a compliance like the traditional anti-money laundering, Bank Secrecy Act, Know Your Customer. That all is done by us. We then integrate with 8 financial institutions. So we allow what's called payment rails. You can bring credit, ACH, debit, wire, checks, whatever you want to do. People actually mail checks to us, and we can do that. So you can basically get some kind of fiat in there and then, understand who your customers are and start working on buying digital assets, trading them. We offer settlement and liquidity on those assets. And then what's really interesting is as a fully licensed custodian, we now have a crypto IRA platform. So, obviously wealth management's a very large part of the US wealth system. It's in the trillions. We allow people to move their IRAs over and get digital assets. This is different than like Fidelity and others that you're seeing in the news where you take a position on like Bitcoin, they hold it, but it's all with them. We actually will allow people to buy the asset, we'll custody for them, and if they ever leave, they take it with them. So they actually own the digital asset they buy. So we're really a B to B to C. So what we do is we enable anybody to get up and running. And the whole stack I talked about takes about 2 years to build, the compliance, the banking relationships, all that. So we basically can get a customer up and running within anywhere between 4 and 8 weeks.
Can we talk a little bit about the industry structure and the difference between like a trust company or a trust custodian versus a depository institution like a bank versus a brokerage custodian, like BNY Mellon? Are there distinctions between these institutions? Is there distinctions on the technology stack? Like, what are the ecosystems like?
Yeah, I mean, they're all a little bit different. So, the 1940s Act is where a lot of this stuff was kind of established. So basically a custodian, they're created to custody assets and offer like the ability to get assets in and out of the custody, but they don't do lending or anything like that. So the 1940 Act restricts custodians from doing lending. Banks can do lending, but they have a lot more regulatory oversight and different areas, and they're not really built to custody various assets. They're more about deposits of traditional fiat. and then using that. So that's probably the best way to kind of describe the difference. And then, as you go as a fully licensed trust, obviously we have reciprocity through every state. However, we're continuing to get more and more licenses and stuff. So we get money transfer licenses. They're called MTLs. And we do that throughout all the states. And either there are states who require it or don't. And that's kind of for just making sure we dot our I's, cross our T's, that, when we're transferring money and custodying, that we have kind of dual licenses for that. And there's specific areas like New York. They have a BIT license or a New York trust. We're in the application process right now for New York trust. So we're not taking on new customers right now. We just, until our trust is completely finalized there. And then there's states like Hawaii that actually have lots of restrictions in their laws. So really not many, there's pretty much no crypto work in Hawaii. It's just because they have a 1-to-1 ratio. You have to have $1 for every digital asset that's in custody or used. So it's just almost cost prohibitive for most people to operate in Hawaii. And then there's states like South Dakota and Arizona and others that are starting to require higher reserves, and that's causing some issues. But, we work closely with the Blockchain Association to, work with everybody else and, get a message out to those regulators and try to, educate them on crypto, why it's not as scary as, some will think, and, how we as an industry, similar to what PCI did, Payment Card Industry Data Security Standards with, Visa and the credit cards. It's just, the Blockchain Association has been great about, being a single voice in an area of education to show people that, look, this can actually enhance TradFi. This can make life easier for everybody. And, it's here to stay, similar to when I was at DocuSign and everyone thought I was crazy for, saying at some point we'll sign everything electronically. And now, like I said, the tables have turned. If you given a paper contract, you're almost like, what's this? I don't even know how a pen works. So it's just complete, change.
Yeah, I mean, I remember doing deal closings on a date where you show up to a law office. That's embarrassing now, I think, to expect that out of people.
Or even like buying a home, like you said, when you used to buy a home, they come in and it's 120 pages you sign. Now you're still going to sign a few, wet ink, wet signature. But, buying a home is so much easier now with DocuSign or, anything like that.
And I do think we are going to be in a place where things of this nature will be attached to the public ledger. And in particular, the economic nature of the transaction really shines when you are using these software systems. There's just less room for the fuzziness of written clause. My guess is that actually the shape of what is permissible around these deals and how standard they are is going to end up reflecting the underlying software structure as well.
I want to reiterate again, I'm going to tell a slight story because I think stories are always great. The next generation is going to adopt this, and I'll tell you why. When I was at BitGo and just started there, my son, who's now 22, he was 16 or somewhere around there, and obviously drove the car. And part of the agreement was you had to wash the car and keep it clean, right? And it was like a Saturday or a Sunday, and he was playing some computer games with a friend. And I said, Jake, you need to wash the car, and you haven't done it yet. So he asked his friend, hey, you want to help me wash the car? And the friend was like, nah, I think I'll just go home. And my son said, I'll give you, I don't remember what it was, like 100 hay barrels or whatever they were playing if you help me wash the car. And his friend said, oh, okay, and got up and washed the car. And I realized right then that my son literally earned digital assets and spent it and got half a car wash out of it without even thinking about it. So like his generation is not.
Did he pay his capital gains taxes in the moment?
I know. They might be coming after him, but it was crazy to see, right? I mean, that's just something that he didn't even think about, but it took him time to earn those hay barrels or whatever on that game. And that had an intrinsic value and a value in the real world. And he naturally paid, and his friend was excited about it. So he got what he wanted, half a car wash, and his friend got what he wanted, 100 hay barrels or whatever it was. To me, that's just a sign that we forget the next generation coming in is going to absolutely accept this. And, they're the ones who are going to start putting retirement income away and things like that. And they want digital assets. They believe in them. They understand them from their core just because they were born with it.
And they're also going to be the one that are running the regulatory bodies in enough time, right? So the thrashing that we see now is, unfortunate. I wanted to ask you about the shape of the customer for Prime Trust. So you mentioned B2B2C and you mentioned the wealth management industry. Very curious to see what are the profiles, what are the archetypes of the firms that you work with?
Obviously, traditional exchanges. I mean, exchanges make sense because, we can do the account openings for them. We have connections to the banks, and, it's actually important to have multiple connections to banks. So when you have like a run like the Doge run that happened when everybody wants to buy quickly, you can overwhelm a bank pretty quickly. So, if you're doing $100 million a day in ACH, at some point, regulators will look at smaller banks and say, okay, you have 60 days of chargeback. In the last 10 days, you've gotten $1 billion worth of ACH, potential fraud. So I think having multiple banks that we can load balance through is obviously appealing to any of the exchanges or anybody who might have high volume runs. Then, look at companies like Swan Bitcoin is a great example. Corey there is a good friend. He, had an idea, came to us, and I think we were like 5 weeks to fruition, and he's done great. Obviously this is a core Bitcoin technology where people are buying and holding through paychecks. And he was our first to get in the IRA platform. So like I said, we don't go directly to consumers. We go through people. So Swan Bitcoin, you can go there and roll your IRA over and start trading. And then we just open to any other ideas. It could be NFTs, different things. We can just, because we are just the Rails custodian and support, like you choose the APIs you want to write to. If you need us to help you get customers online, if you need, fiat in, if you need custody, whatever you need, there's an API we've written to help enable that.
This is the other part that I'm interested in terms of the shape of the customer. You did used to go out and sell paper contracts attached to user interfaces or, bespoke work to develop user interfaces for some bank based on their wireframes and customer prototyping. And now you're selling APIs, and kind of embedded finance is a very broad category. And it's almost presumed that the way that you sell fintech product to institutions is through APIs. Can you talk a little bit about kind of like your go-to-market strategy and understanding these integrations and whether that's evolved at all, if you've had any learnings there?
Yeah, I mean, I think I mentioned the Doge run. That was a learning experience for everybody, right? It was definitely a very difficult time for everybody because it was just so much volume coming in. We never went down, but we were slow during that time. So we've expanded our infrastructure significantly, hired a lot of engineers, expanded the way that we process. We've expanded our banking relationships. We've brought in more banks and larger banks so that we can handle the volume much, much better. We continue to work with our customers and talk to, especially our larger customers, like, what are you building towards? What do you see? We can see volumes of certain things that seem to be probably doing better than others. Like, so we'll see that, maybe it's just, people are buying and holding, maybe the NFTs exploding, whatever it is, we can kind of see that in our ecosystem. And then we start to make sure that we're constantly building towards that. So an example I keep bringing up is, wealth management. I mean, there's definitely retirement income and wealth management is key. And it seems to be where people really are starting to go, towards. We're seeing lots of announcements from traditional financial institutions about it. We're seeing lots of our customers offering it. And so I do think that'll continue to be the growth, especially as kind of like, interest rates are up and people are kind of starting to save more. And I'm quoting as I say it, but I think that there'll be more holding of assets. And if you're going to hold it, it would make sense to put it in some kind of retirement income vehicle.
Are APIs a product feature or are they a distribution mechanism?
It would be more of I'd say both. So the distribution mechanism, because you need them to integrate, but all of our product features are built through easy to integrate APIs. So the API is just more of the simplicity around it, but the product itself is going to be built with specific customers. And then once we can figure out how that's integrated with, some of our key customers, we can roll it out in a much simpler fashion to others.
I'm guessing the prime in the name stands for prime brokerage type services, right? So do you also participate in kind of lending and trading? Are those pieces things that you enable for your customers?
At this time, we don't. So like I said, we're a custodian, so it's not about lending. We obviously look at staking and other needs, and there's ways that we'll do certain things or partner with others. But right now, we're more focused on the assets coming in, enabling people to move assets, know their customers, store the assets, liquidity settlement, all that. And then we can partner with others if that's needed by a consumer. We can actually make sure that our customers have the ability to directly connect to someone who might be doing the lending.
Gotcha. Yeah, probably a prudent move in the last year or so. I guess as you look forward to the growth of the business and you're quite indexed to just assets flowing into the space, where are the green shoots? It's 2022. The bear market's here. The traditional economy is in rough shape. People's consumption ability is way down. But many of us are here betting on Web3 and kind of seeing the adoption curve increase over time. What are the green shoots that you're seeing? You've mentioned wealth and IRAs. Are there other things that you're looking at that you're paying attention to maybe as advanced indicators of the types of things that would drive growth in this asset class?
I think one thing, I'll step back. One thing we're seeing in the current market condition is probably growth in companies such as Prime Trust, because we're kind of an outsourced model. So if you were thinking about doing your own traditional banking relationship and your own compliance, you probably wouldn't do it right now for a consumer one of our customers, just because you're trying to cut costs. Similar to if I was going to build a data center myself right now, I probably wouldn't. I would just, use AWS, Azure, Google Cloud, something like that. So we're seeing kind of an uptick with us just because I think we're an outsourced model. So in a down economy, it makes sense to come to us. And then specifically, obviously, I said, the wealth management, some holding. And then we're seeing more kind of interesting use cases just coming up with smart contracts. So, Ethereum, Stellar based, or like NFTs, and more in like a traditional space where it's not necessarily selling artwork or something like that, but it's more using the NFT to track things like, guarantee that Louis Vuitton purse that you're selling is a Louis Vuitton purse, or, a smart contract that's used in some way to ensure that, expediting some kind of agreement. So we're seeing more, I'd say, crossover to traditional uses, which is pretty interesting. So some of the fund uses that were probably more prevalent when there was money flowing freely kind of drying up, but they proved out a use case that can be used for the day-to-day to undercut like global remittance and other areas.
Just the waves coming in and out, right? Security tokens, then DeFi, and then wherever it is that we are today.
Yeah. So it's pretty exciting where we're at because, there's a global meltdown, there's a global economic impact just in traditional space. Then you're seeing it in the crypto space, but I wouldn't really call it the crypto winter because it's actually tracking very closely to the S&P this time. So it used to be when the S&P was up, crypto would be down and vice versa. Now they're tracking together. So for me, it's a pretty exciting time because it's showing that crypto's here to stay and it's starting to track like a traditional market. And you're seeing a lot of the TradFi come in the space. I do think we'll see some M&A over the next year just because, there's going to be it just happened in the internet.com burst the first time, right? So it's like, people have a digital pet, it's a good idea, but you don't need 100 of them. So one or two survive, right? You have, the first money transfer systems like PayPal, and you had a bunch of other ones and, only a few survive. And I think you're going to see some of that. You're going to see some consolidation, which will be a good thing because I think some good ideas will come together and they'll make much stronger companies. And I think you'll see the TradFis come into the space as well and either, take positions or, partner closer or even buy up some of those and really get us into a space where, a year from now, we're going to be coming out of this much stronger and it's going to be use cases that last.
On the regulatory side, what's your view of the destination that you think American regulation will land? There's been a lot of kind of volatility in terms of which regulatory agency over what time horizon, depending on what personality, and kind of, some of the feedback that I've been getting more recently is that it's likely legislation, not regulation, that will create clarity in the space, but you are much closer to the ground truth in terms of what really needs to be set up from a security perspective. How do you see things? What are you hearing? And kind of what's the best case for where we could land?
I'm going to take a shot at it, but I do want everyone who's listening to know that we did put out a state of regulation report. It's on our website. Jeremy Sheridan, who's our VP of Regulatory Affairs, was the assistant director of the Secret Service. He retired and joined us. So he spent a lot of time working with regulators and politicians on this type of stuff, especially CBDC. So there's a lot of good information in that. To specifically address your comments, I do agree that it's going to take us a little bit of time to figure this out. I think there are going to have to be some new laws potentially. We might have to look at old laws that were written that just aren't relevant to the way things can happen today. We do have to look at, DeFi and how do you track things when our laws are written for a financial institution to own all your data, have it. And now we're talking about data being on a public blockchain and how do you change that up? And I think that It's going to take some time. To your point, we're going to need some young blood in there, right? And, people coming up who grew up in the digital space who understand it a little bit better. I think we're going to need some understanding of who should regulate what. What does the CFTC do? What does the SEC do? Who takes on what? And when is it a commodity? When is it, like just any of those? Like what does it mean? And I do think that we might see like the Blockchain Association and others starting to do some self-regulation, which can become law. So we saw that with the payment cards, right? The PCI, DSS. It's kind of all the cards coming together and saying, okay, we're going to do this because it's the right thing to do. And then that can actually motivate either laws or regulation, or sometimes the regulators will let it go because they'll say, you know what, they're following PCI compliance, which means that they're doing what is good and worse. So I do think we'll see some non-regulatory bodies such as like the Blockchain Association kind of come up and maybe start to get guidelines that we all follow, which will be great for the space because those can morph much easier than laws.
Thank you for opening that up. I think it's a source of anxiety for many of us, but at the same time, we can't just stay still and wait for the world to give us answers. Tom, thank you so much for joining us today. I wanted to ask if our listeners want to learn more about you or about Prime Trust, where should they go?
Go to our website, primetrust.com. There's lots of information there. I think, like I said, the state of regulation report is out there and lots of information there. So I would start there. Hopefully at some point I'll be back on the show. Would love to talk to you more as we evolve through this.
Absolutely. Thank you so much for joining the podcast today.
Thank you for having me.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things FinTech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.